Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today we're going to talk about the mysterious rise in the price of gold, which set an all-time high yesterday, what might be driving it, how to play it, the gold situation with the favorites, and an update on Canalaska Uranium, which just published some further results for its Pike discovery.
How is the market responding to the recent gold uptrend that on Thursday achieved an all-time high of $2,214?
The market had not really been taking the uptrend in gold very seriously. The big hope had been that eventually $2,000 would become the floor rather than the ceiling. Gold had a pretty good finish last year and was doing well in January, but then it went into reverse, and on February 14th, it bottomed at 1,985, an apparent testament that, yes, 2,000 is still the ceiling. At the same time, Bitcoin continued to roar as a result of all these ETFs being approved so that ordinary people don't need to worry about their wallet being compromised or having to deal with exchanges, Bitcoin exchanges. Now they can just go to the New York Stock Exchange and trade these ETFs, and the managers of the ETF do the arbitrage between the actual Bitcoin and the instruments, the structured products that the investors are buying. So there has been this outflow of gold from the ETF, gold ETFs, which are the way these people play gold. Nobody really wants to, ordinary investors do not want to deal with physical gold. Those who buy physical gold, they buy it, they pack it away somewhere in a vault, and they leave it as a long-term hedge against uncertainty. But those that want to bet on making a capital gain from gold, they will buy the gold GLD, the GLD ETF amongst others. And the GLD has had a rough time this year, even though gold has been trending up very strongly since it bottom there in mid-February. The GLD so far this year, at its worst, had lost 2 million ounces, and currently it is still down 1.5 million ounces from the start of the year. That's about 27 million GLD or ounces in it right now, from about 43,500,000 at the peak in 2012. So whatever is that's pushing gold, it is not investor sentiment. If anything, investor sentiment is geared towards Bitcoin, which made a high of $73,750 recently. It's down a little bit from that. Currently, the just 19.67 million Bitcoins that are in existence, they are worth about $1.4 trillion. Now, to put this into context, all the gold that exists above ground, estimated to be about 6.6 billion ounces, half of which has been mined since 1980. It's worth about 14.6 trillion. So we're seeing kind of a 10-to-1 ratio in these two asset classes. Now, what has been interesting as we watch the gold pour out of the ETFs such as the GLD, and we see money pouring into the Bitcoin ETFs and thereby dragging up the price of Bitcoin. The price increases are happening overnight in London, which means it's physical gold that is leading it. Typically, it has been the activity during the North American trading hours, what the GLD ETF is doing. That's what's determining what the trend is and what London will correspond to the next day. But now this seems to be reversed, which means that there are some mysterious buyers out there socking away physical gold. And one suspect group that I have are the tech bros out of Silicon Valley who have been sort of big pumpers of Bitcoin. The insider trading reports for their companies show that insider sales now for the big tech companies now outpace purchases, a signal that maybe the tech boom has peaked and they are cashing out of that. But I also suspect they are cashing out of the Bitcoin as the suckers out there go and buy the ETFs that Wall Street peddles to them. They are selling Bitcoin and putting those proceeds into physical gold. Because when you consider the AI dream that's really getting a lot of momentum right now, and the energy requirements of all this computation that's going on, we're going to see a conflict down the road where when North Americans start suffering brownouts because the AI is sucking up all this electricity, they're going to look for somebody who can we stop doing this. And the Bitcoin miners, those that are based in North America, they are going to have a problem. They will be tracked down. They will be shut down because Bitcoin mining serves no purpose except to facilitate the swapping of ownership of Bitcoin and to facilitate the conversion of the proceeds of crime into proper money that you can use to buy real things in the real world. So from the perspective of the market that's been watching this, it doesn't understand why gold is going up, why it's making new highs. Inflation is 3.2%. It's still not as low as the Federal Reserve wants it to be, but the Federal Reserve has signaled that it will have 3 rate cuts by the end of the year on the assumption that, yes, inflation has stabilized and will continue to decline, but that's still not a reason to be so excited about gold. I think the gold is being bought by deep-pocketed investors who understand that there is a cataclysm coming that's going to be very disruptive. Just getting into conspiracy theory mode, that freighter that crashed into the Baltimore Bridge, all of a sudden it has no power. It's been said, this is not an act of terrorism of any sort, but one wonders, was this a cyber attack where somebody reached into the control system of that freighter and basically turned it off? And when the 9/11 happened and they smashed those planes into the towers, nobody expected these towers in such spectacular fashion to crash to the ground and become just a pile of rubble. And similarly, maybe nobody quite expected that a freighter crashing into a bridge would cause the entire bridge to collapse. And it is a miracle that this happened at 1 a.m. when there would have been very little traffic on that bridge. Imagine if this had happened during the daytime hours when the bridge is packed with cars and all of them suddenly are underwater. So this was fortunate with the timing, and that doesn't rule out that it was perhaps a cyber attack that triggered it. But we've been getting warnings about cyber attacks reaching into the grid, all the infrastructure, the Chinese, the Russians, the Iranians, the North Koreans. They've all been planting malware inside the system. Everybody's scrambling to try and purge them and neutralize them. But we are potentially facing a catastrophe down the road. And those Bitcoin mining machines are not going to be doing anything if some sort of cyber attack like this happens. So who knows? Maybe the buying is coming from very deep-pocketed people converting their Bitcoin and also their tech equities into cash and then parking it into gold because they understand that things are going to change in a very big way. Now, in terms of the market reaction, I created a gold producer index in 2020. It was sort of based on 1,523 gold as of December 31st, 2019, and it's up only 44.2% since then, even though gold has gone up substantially and producers are supposed to be leveraged. Most of the producers bottomed in mid-February when gold dropped back below $2,000 and everybody thought, okay, yep, it's still a ceiling. But since then, we have started to see the gold producer index catch up in terms of following the trend in the price of gold. So since mid-February, from their lows that the producers achieved, we're seeing a range of 10% to 66% gains, with McEwen Mining achieving the biggest gain of 66%. The two big giants, Newmont and Barrick, they're up 20% and 18% respectively from their bottoms in February. And Agnico is up 32%. And the more the mid-tier type companies like IAMGOLD, New Gold, Torex, and OceanaGold, they're up 45% to 55%. Now, that's not a significant gain, given the idea that maybe $2,000 is the new floor and $4,000 is the new target for gold. It hasn't yet sunk into the market, but we're starting to see the producers respond in this manner. We're not yet really seeing it in the resource juniors, but that's a separate question, how to play the gold trend in terms of the resource juniors.
Which juniors in your KRO favorites would you pick to bet on gold?
There are two extremes. One is the ounce in the ground type company, where they're waiting for the price of gold to go up in a convincing manner into new, real high price territory. And in that category, West Vault Mining is my favorite. They have the Hasbrook project in Nevada. It's fully permitted. They updated the feasibility study at the start of 2023, so we're dealing with numbers that are fresh, not ones that are stale because and don't reflect the inflation from the last few years. And I've had them at several of my metals investor forum conferences as my gold proxy pick. The company has decided that it's not going to try and put this into production. It's not going to spend more money on trying to make the resource bigger, and it's not going to go into any M&A type activity to acquire other juniors with ounces in the ground, at least not at this stage yet. And West Vault, it's been in that 90 cents to dollar range. It's $1.03 as of Thursday's close. So it hasn't reflected the leverage that is implicit in the underlying numbers. So, I take their feasibility study numbers and created my own discounted cash flow, and they used a base case price of $13.89, and currently the price of $22.14. The base case price was actually $17.90. So that's at that price of gold at a 10% discount rate. The value per share in after-tax net present value terms is $3.09 a share, and $4.37 a share if you use 5% as a discount rate. At the current gold price, you keep all the costs the same, it jumps to $5.52 at 10% and $7.41. And if you were to go crazy and say, well, what if gold actually doubles into a $28 trillion asset class? Well, at $4,000 gold, we're talking about a $15.75 price for the 10% discount rate and $20.22 for the 5% rate. So this is how the leverage within these ounce in the ground type of projects works, because if the costs are not inflation in correspondence with the price of gold, then you can see, like, if gold merely doubles from the current level, you're talking about the stock price increasing 15 to 20 times from its current level. So West Vault Mining is the stock that, from the favorites list, that if you think 2,000 is the floor and $3,000 is not unimaginable, then just buy West Vault Mining, put it away, and pay no attention. Once gold really gets cranky and everybody does believe that we are now in a gold bull cycle, then the stock will be trading in that sort of $5 to $10 range to reflect a potential buyout by another gold producer. And in the case of Nevada, there's a number of mid-tiers such as Centerra and that, who themselves will benefit from the higher gold price. Right now, these modest gains that I described, it's not really representing conviction that we are in a gold market yet. We will see these gold producers go up in a in a big way once that conviction sets in, and then they will feel empowered to take out these ounce-in-the-ground projects like Hasbrook and put them into production. Now, that's the extreme of the ounce in the ground where the feasibility has already been demonstrated. And the other extreme is discovery exploration plays. And until we see the conviction come into the market, I think the best play is really to look at very good emerging gold discoveries or potential discoveries. And the favorite on my list that I think people should be paying attention to is Solitario Resources Corp. Its Golden Crest project in the western part of the Black Hills of South Dakota has potential to be a mirror image of the 60 to 90 million ounce district on the eastern side. The big chunk is the basement-hosted Precambrian Homestake mine, which yielded 60 million ounces. But then there's another big chunk, which is the much younger sedimentary package hosted wharf-type deposit. And the company has just put out another update showing that this geyser zone that they talked about recently, they've now extended it to the north a couple kilometers. They've hopped across a valley, which seems to be a dead zone in what is a northeast-southwest trend, and reported another batch of high-grade surface samples. And they call this the Sleeping Beauty discovery. And this is in the Ponderosa plan of operations. It's on the other side of Highway 85, which tracks the Spearfish Canyon River system. And the company has kept its border property boundaries well away from that corridor because it doesn't want to overlap its claims. So it's a separate, non-contiguous block for which they have a plan of operations underway. They are hoping to get, for the main Golden Crest plan of operations, they're hoping to get approval by mid-April, which then would set the stage for drilling in June. And what we're seeing emerge is just this incredible collection of clusters of gold mineralization at surface of rocks that don't exist in the northeastern and eastern parts of the Black Hills because they've been eroded away. So we have a powerful system that has come up from the basement through several layers of stratigraphy, including the Deadwood Formation that hosts the wharf mineralization, and it's peeking out at surface in high-grade zones. Now, they can't tell until they actually drill what sort of structural controls there are, but there will be the cross-cutting vertical structures within this package, but there'll also be lithological bedded boundaries where the mineralization will have flowed sideways. So once drilling gets underway and they start showing that what we're seeing at surface is just the tip of an iceberg, here's a stock that can do extraordinarily well, and it trades both on the TSX with the symbol SLR, where it is less liquid, than on the New York Stock Exchange, where it trades with the symbol XPL. And keep in mind that Robinhooders can trade Solitario through its New York Stock Exchange listing. So if Golden Crest gets this permit and it's not obstructed in some way by litigation, and they start drilling and start demonstrating that there's this fantastic overlooked endowment in the western side of the Black Hills area, this stock will go absolutely crazy. And what they're looking for is something that works at the floor, the $2,000 ceiling of gold. It doesn't require $4,000. They're looking for grades and tonnage that work with the price we have. So with a play like that, you get the best of both worlds. If gold does continue to trend towards 3,000, you're going to get a lot of people coming in. And if discovery starts showing that there's a potential huge system here that this team, Chris Harrell's team, has figured out, sleuthed out, and is getting permission to drill, then you're going to see tremendous upside for a company that's got a valuation that's really just based on its 30% carried interest in the Florida Canyon Zinc project. So West Vault Mining in my favorites as the gold proxy, ounce in the ground, ready to be taken out when we have a convincing bull market in gold, and Solitario Resources Corp as the blue sky gold exploration play that could deliver an incredible bounty in an area that was overlooked, area that has hardly any exploration pits compared to the 150,000 that are on the eastern side of the Black Hills, where all the gold has been found and mined during the past century.
What do the latest Canalaska uranium results for the Pike discovery mean?
The company reported that it has drilled 2 further wedge holes after to follow up on hole number 4, which they reported in late February. Now, hole 4, and these are radiometric readings, which are quite reliable if the instruments are properly calibrated. That had 16.8 meters of 13.75% U3O8, including a 4.7 meter segment of 40.3%. And what was important was that this was at the unconformity between the overlying sandstone and the granite basement within the graphitic peelite that ends up occupying the fault zones. These big sort of northeast-southwest structural corridors in the Athabasca Basin. These fill up with graphite over time, and when the hydrothermal systems get going and they harvest all the uranium from the upper sandstone and circulate it back through these fault structures, the graphite ends up dropping, precipitating the uranium out of solution and creating these very high-grade deposits. Now, the McArthur River is, of course, the biggest and richest. It's about 1 million tons of 16%. It's at a depth of 500 to 600 meters. The Pike discovery is farther in the basin, so it's at about 815-meter depth. And the results that they reported this week was hole 5 had only 4.5 meters of 1.4%, including 2 meters of 2.78%. And what the market didn't like about that was that this was just in the sandstone. When they went through the sandstone, it went into the granite basement, and they did not hit the graphitic peelite, which is where the rich deposits would form. So that must have been disconcerting to Corey Bellick's team as they sort of push this hole down and come up with this. This was about a 20-meter step out across the structure, which is a sort of a northeast-southwest corridor. So they stepped back and drilled a 10-meter in between, and this is where they got 10.5 meters of 10.84% U3O8, which is very good. Now, this shows that, okay, this part of the target is rich, and they obviously realized that it steps down. There's a fault structure that has dropped this zone down a bit. And if you look at some of the old drawings or sketches of what the Pod 2 from McArthur River, which was like 577,000 tons of 17%. When you look at the geological complexity due to faulting and folding within that particular area, it's no surprise that this first step out across the structure suddenly shows, it actually disappears. In fact, the Pod 2 of the McArthur River mine, it was discovered after Pod 1 as a result of them sinking a shaft and then drilling from underground and delineating this deposit. And it's a relatively small deposit, about 100 meters of strike and about 30 to 90 meters of height and about 20 meters wide. And there's a whole series of them. This is why they call this a string of pearls is what you're looking for, all within these structural corridor at the unconformity within the graphitic peelite. So the market saw that they did not do any strike extension. There's one hole that was drilled last year, number 2, which hit the graphitic peelite, but it had only a short interval, and it was much deeper. It was about 80 meters below the unconformity. So that doesn't really mean anything. But there's no strike extension yet indicated. But there's like 50 meters on both sides. So they've stopped drilling in this area. They want to get the geochemical assays to confirm there isn't anything funky with the radiometric readings. Are generally geochemical assays will be higher than the radiometric reading, so we're waiting for that. They intend to resume in June with delineation drilling, and the market kind of shrugged and said, oh, okay, well, you haven't really made this bigger. But what they have managed to figure out is 3D information about what's going on down. That first hole was simply one pierce point. They did not publish a section with that first hole at the end of February. They have a section right now which they have a better understanding of it. So the market kind of didn't really appreciate that we learned an awful lot through this press release, and the idea that as they start looking for these pearls of high-grade uranium within this corridor, the idea of McArthur River clone eventually coming into view, it remains intact. And in a previous Kaiser Watch episode, I did an outcome visualization of what would a McArthur River be worth today, and it came at $89 a pound uranium. That came out as like a $8 billion target. So we have tremendous potential upside. It represents good speculative value at the current valuation, and the beauty is we're getting more information that gives us confidence that when they resume drilling in June, they will be able to start giving a three-dimensional shape, a long strike, and deeper to what this initial Pike discovery is all about. And they still have a drill roving on the property until I think late April, testing other targets, trying to sort out where this unconformity is, and maybe we'll get a surprise from one of that. But right now, the Pike discovery is where the focus should be, and that's what I think is going to drive this stock a lot higher later this year when they start really delineating what the shape of this is, how big it is. And the footprint there, it's maybe a quarter million tons, which is about a fourth of what McArthur is. So there's room within just this area of the Pike discovery to come up with something very substantial. And that would only be about 90 million pounds of uranium at, say, 16%. We don't know what the grade will be. It's still early days for all that. But this is an exciting new discovery that allows one to dream about another McArthur River scale discovery.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.